In an industry where a company that's a long-term investment is hard to find, there is one gold company that may pique your interest for gold investing, and that is Sandstorm Gold. Sandstorm Gold is a royalty and streaming company that provides capital to gold mining companies in exchange for a cut of the gold that they dig out of the mine. And Sandstorm buys that gold at a low fixed price, typically around $400 per ounce on average. There are a few gold royalty companies out there, but we think Sandstorm is worthy of your own due diligence. As a disclosure, we are proud shareholders of the company, and although we hardly advertise gold stocks, we believe in the Sandstorm management, led by former executive of Silver Wheaton, Nolan Watson. Sandstorm is geographically diversified with exposure in North and South America, Africa, and Asia, and has 21 producing assets that have netted them an increasing amount of positive operating cash flow and revenue in the past 4 quarters. They also have 22 mines in the development stage that will increase their cash flow substantially in the next few years. Be sure to check out Sandstorm Gold at sandstormgold.com/invest. Hi everyone, this is Jason Bjork of Wall Street from Main Street. Welcome back to another Wall Street from Main Street podcast interview. Today's special guest is a returning guest. He is author of 2 books, Life After the State, Why We Don't Need Government, and Bitcoin, The Future of Money. He's also a writer for Money Week, and he's been host of the Frisby's Bulls and Bear podcast for a while. Dominic Frisby, thank you for joining me again.
My pleasure, my pleasure. How are you doing, Jason?
I'm doing pretty good. So far, 2017 has been a very interesting year. In 2016, we had a lot of surprises. We had Brexit and Donald Trump. Since you live in London and you've grown up there and lived there for a very long time, I want to ask you about Brexit and what's going on these days. There's the Article 50 trying to get through right now. Do you think the elites in London and Brussels are still fighting this and trying to stop Brexit?
Yes, and I wouldn't say so much the elites, but there's a massive division in this country between pro-Brexit and anti-Brexit, and it's a bit like the division that you have in the US, I guess, with pro and anti-Trump, and whereas often with previous elections or previous decisions that have gone on, the losing side has just kind of resignedly accepted whatever the vote was. In the case of Brexit, that hasn't been the case. And the left have, or not necessarily the left, but predominantly the left, but the Remain group have just won't accept it. They won't lie down and accept it. And they've tried to fight and undermine it by every means possible. So we had all sorts of legal goings on. They've tried to try and oppose it. There's a huge anti-Brexit campaign in the media. A lot of the, particularly on television, is generally opposed. And there's this kind of, by the way, on television, there's this kind of, and on radio, you get this kind of, it's almost like an unstated bias. Like if something good happens in the economy, something good has happened despite Brexit. Do you see what I mean?
Yes.
And rather than because of Brexit or just because something good has happened, it's always despite Brexit. So there's always this implication that Brexit is a wrong thing. But nevertheless, Parliament got its vote over the issue last week and this week, and it voted overwhelmingly to leave. It voted, in other words, to represent the wishes of the people. And so the kind of anti-Brexit cause seems to be dying away a little. I'm sure it'll all rise up again and get a bit hysterical when Article 50 is actually triggered and when we do actually leave. But now there's a certain amount of resignation is taking hold. But of course, what's going to happen is as soon as anything bad happens, the Remain group will go, look, I told you so. And as soon as anything good happens, the Leave group will say, look, I told you so.
Yeah, it's the same way with the media. So Trump is actually sticking to a lot of his campaign promises for the most part. Now, obviously, his personality is a bit out there and crazy, and he's tweeting up a storm and is angering a lot of people in the mainstream media. But a lot of his campaign promises that he promised the people to get elected, he's been, going through those with executive orders.
Sure. It's unprecedented in modern politics for a politician to do what they said they were going to do.
Yep. That's actually the definition of a politician, Dominic. I was going to say most most politicians don't do what they say. So Trump is not acting like a normal politician for the most part.
No.
Do you think Brexit was a taxpayer revolt? Do you think there was a lot of people in England who were just fed up with getting more and more taxes layered on with the immigration problems and the other things that were associated with it, and that was one of the main reasons about why Brexit was voted for?
Well, there have been all sorts of surveys as to why people voted Brexit, and probably the most comprehensive one was by a chap called Lord Ashcroft. And the overwhelming reason that people voted to leave the European Union was to regain our own sovereignty. And, you know, a lot of the Remain campaign have accused the Leave campaign of being anti-immigration and racist. But immigration was not the primary reason in most cases. Immigration, I think, was the second reason for overall. I think it was like 30% of people voted immigration was their primary concern. But so sovereignty was the main reason. And you know, at the moment, each country in the European Union, for the most part, sets its own taxes. So I don't think taxes were the reason. But, you know, tax is all part of government control. And gradually, more and more control was you know, regulation and lawmaking was done in Brussels rather than in the UK. And I think in the grand scheme of things, the European Union was hoping to move towards a kind of European-wide system of taxation, but that's many years down the road. So I don't think taxation was. It was, but control and taxation are very similar things, and it was all about control. And in fact, that was the rallying cry of the Leave campaign: take back control.
Yeah, there was actually a really good documentary about Brexit. I don't know if you saw it, but they were talking about the bureaucrats in Brussels and how, you know, they're unelected officials. They make six-figure salaries. They get these ridiculous perks, and then talking about all the rules and regulations if you own a business in England or part of the European Union, how difficult it is to operate a business, and how, you know, the bureaucrats in Brussels are basically choking off the economy and siphoning a lot of the wealth over there.
Well, I'm afraid, yes, that there's a lot of that going on, and you know, the less regulation there is, the easier it is to run a business generally. And what tends to happen with the more regulation you get is it tends to reinforce the positions of large businesses, because they're the only people who can afford the regulation. So, and there's no doubt that, I think it was Trump that said it, but I mean, he wasn't the first to say it, but the European Union tends to be run in favour of Germany, and you know, the southern European nations are the ones who've suffered most. And actually, Britain did okay out of its role, kind of in it but out of it. But I think will thrive even more. I mean, there was an article by Ambrose Everett Pritchard in the Telegraph this week saying, making the argument, which is an argument I've also made, that Britain could now become a kind of Switzerland, you know, on the edge of the EU but not in it, and benefit from, you know, in the same way that Switzerland benefits, and the pound could become a Swiss franc. I'm very bullish on the pound, by the way.
That's very interesting that you're bullish on the pound, because it seems that the pound was attacked by currency traders on the Brexit news. It was down 14% against the US dollar in 2016. I think within 2 minutes with these high frequency trading computers, the British pound was down 6% against the dollar. So just a record move.
Yeah.
You think there's going to be a strong reversal then?
Well, yeah, the pound, I mean, it's rallied a bit now. It's like 125, something like that, to the dollar. And at one stage it went to, like you say, there was this moment. There's different arguments about what the number was, but at one stage it went to like $1.14, which is the lowest it's ever been against the US dollar ever, except for like 1 month in 1985. When the US dollar was extraordinarily strong, and they had to eventually agree the Plaza Accord to weaken it. The G5 nations at the time, France, Germany, Japan, Britain, and the United States were the G5 economies, and the Plaza Accord was an agreement to weaken the US dollar. But yes, so the pound was extraordinarily weak, and you know, I'm not one of these people that attaches too much significance to cycles. I think it's very easy to look back at history and find some kind of arbitrary pattern and declare that there's a cycle. But nevertheless, there does seem to be this weird 8-year cycle in the pound where it had an almighty crash last year, 2016. It had another almighty crash in 2007, 2008 in the financial crisis. Go back, it had another big crash in 2000, 2001 after .com. In 1992, it had another one of its big crashes. Soros famously shorted the pound, and we had a thing called Black Wednesday when the pound fell to almost record low levels. And then go back 8 years, 84, 85, and you're at that moment that I was just discussing, the crash in the pound that had to be dealt with the Plaza Accord. And then finally in 1976, another 8 years before then, there was another big crash. I'm not going to go back another 8 years because you're in, gold standard era then, pre-1971. So there is this weird 8-year cycle. So I think if there's one thing for listeners to take out of our conversation, Jason, it's to put a reminder in their calendar to look to be shorting the pound in around 2022, 2023, something like that, and looking for a low at some time in 2024.
That's very interesting. So you think then that in 2 or 3 years from now that the Brexit will actually finally go through, barring extra lawsuits, that's the current trajectory, the pace that it's on right now?
I think I would say so, yeah. I don't see, politicians take the path of least resistance, and the path of least resistance now, the Tories, the opposition, the Labour government, our equivalent of the Democrats, is in total disarray at the moment. It's got an incompetent leadership. It's been hijacked by the extreme left. The Tories, which are to the right of centre, our equivalent to the Republicans, if you like, they have got an extremely powerful position, and the line of least resistance is now Brexit. And I think Theresa May, even though she voted Remain, I think she was a closet Brexiteer. She was a closet leaver. But if a prime minister didn't go through with Brexit now, I think there'd be uproar. It would just be unconstitutional, and I'm not saying there'd be a revolution, but something close to it.
Yeah, your country is deeply divided like the U.S., like you discussed earlier. I mean, I met a British couple that came over here to D.C. during the summer in 2016, and, they were totally anti-Brexit. It seemed to me they were brainwashed. They didn't even want to hear the other side's argument. They seemed like Democrats here in the United States. So, unfortunately, I think things, people aren't going to look at the other side's arguments. They just have their minds made up already.
I think I would, people are pretty recalcitrant about their politics, and I've pretty much made my mind up about my politics, and I won't entertain any other points of view. And I think most people are pretty decided on what their views are, and then views do change over time, of course, but there aren't that many wavering voters. It's maybe only 5 or 10% who are wavering, and it's normally the winning of that 5 or 10% that wins you in an election.
Yeah, that's a good point. There was a lot of swing voters who actually were going to vote Bernie Sanders here in the United States, and a lot of them, Hillary Clinton thought that they would vote for her, and a lot of them either didn't vote, they voted for Jill Stein or Gary Johnson, or they voted for Donald Trump or didn't vote at all. So Hillary Clinton was counting on the Bernie Sanders vote to switch to her, and it didn't happen. I want to transition now, Dominic, and ask you about Bitcoin. You wrote a very good book about Bitcoin. You had one of the first Bitcoin books out, if I remember correctly. I liked both.
Yeah,
I've read.
It was actually the first one by a kind of recognized publisher was mine.
Well, I really enjoyed that book. I've read both of your books, and I think they're very good reads. They're easy reads for our listeners out there. You don't go into a lot of crazy technical terms on the Bitcoin book, and they're available on Audible audiobook too for our listeners who like audiobooks. But I want to ask you about Bitcoin lately. Bitcoin's been fighting to stay above 1,000. It bottomed in late 2015, early 2016. Around $225, $250 US, and really it's just 2016. It's been steadily going up a lot, and it got to $1,100 at one point before a correction. So where do you think the big demand increases have come from Bitcoin?
In terms of where Bitcoin is actually used on a day-to-day basis, people actually using it to buy and sell stuff. The biggest demand is from the online black markets on the dark net. In terms of people buying it as a speculative investment vehicle, that demand is from a kind of sophisticated, technologically literate, reasonably moneyed group of people around the world. There is massive amounts, according to figures that you read, they aren't entirely true, but according to figures that you read, 90% of Bitcoin trading actually takes place in China. But actually what is going on is people are using vehicles, derivatives, to speculate on the Bitcoin price. And the agency, the companies that offer this facility to Chinese speculators don't actually go in and buy Bitcoins in the underlying market. So this idea that China determines what goes on with the Bitcoin price is slightly illusory. I stress slightly because there's a new regulation that came in today, literally 3 or 4 hours ago, where I can't remember the name of the company off the top of my head, but has made it much harder for Chinese people to own Bitcoins legally. And as a result of this new regulation that's come in, the Bitcoin price has sold off at one stage by 10% in 2 hours. And now, before that sell-off began, the market cap of Bitcoin was over $17 billion, $17.2, $17.3 billion, something like that. 2 hours later, the market cap of Bitcoin was $16.1 billion. So in just 2 hours, over $1 billion just evaporated into thin air. $1 billion of value in 2 hours. How about that? I worked it out. It's about $8 million a minute.
That's pretty crazy, Dominic.
All because of some new regulation that came in.
Well, I actually have the story up on CoinDesk. I pulled it up before we started our interview, and it's actually the People's Bank of China. So that's the Chinese central bank. And they told the Bitcoin exchanges in China to start charging fees now on trades, larger fees. So it looks like, the government here is stepping in, trying to keep people in their fiat currencies and get people out of, buying and trading Bitcoin.
Maybe. I mean, I think there's obviously a massive exodus capital flight from China, and Bitcoin is the ideal vehicle to get your capital, offshore. So I'm not sure how many Chinese people actually use it for that. I mean, if you were a successful Chinese businessman and you had, 5 million quid you wanted to get offshore, would you risk 5 million quid buying Bitcoin?
Maybe a little bit of it. You could walk the money.
A little bit of it, maybe, but I wouldn't put the whole 5. I'd rather try and keep the 5 billion. I say 5 billion quid. I mean, $5 billion, whatever it is. I'd want to find a less. There's so many ways that Bitcoin can go wrong. You can get hacked. The price can collapse. Whatever it is.
Yep.
That 5 billion quid. At 12 o'clock this afternoon was 4.5 million quid at 2 o'clock this afternoon. So yeah, but it does seem I don't know, they're trying to I can't really comment, Jason, because I don't follow it that closely, but it does seem that the Chinese are trying. There's a lot of capital trying to escape China, and the Chinese authorities seem to be trying to prevent that capital fleeing where they can.
Yeah, well, I don't think it's only the Chinese government doing it. Did you see the reason?
Oh, no, it certainly isn't only the Chinese.
Yeah,
no.
I mean, it looks to me like with this cashless society that a lot of governments are moving forward with and trying to switch to digital currency. We've seen these books come out from these academic economists, with Ken Rogoff's Curse of Cash talking about banning $100 bills, $20 bills, $10 bills in the United States. The European Union was talking about banning cash recently as well, going all digital. So, it seems to me that they're looking for new ways to track and tax every transaction, and Bitcoin is, not part of that system, at least right now. Although I know for a fact that governments are testing like government-issued blockchain currencies for more control over the system. Did you see the Reason piece, Dominic? Reason a couple months ago, they did some in-depth analysis. They actually interviewed some Venezuelan Bitcoin miners, and Venezuela is having hyperinflation right now, and just to buy food online from Walmart or Amazon.com, which accepts Bitcoin through intermediaries, there's actually a lot of Venezuelans who are mining Bitcoin and using it to buy food to get it smuggled into the country so they can survive the hyperinflation and food shortages in Venezuela.
Yeah, well, and also, and I guess the power is very cheap in Venezuela as well, so it makes it that much more economical.
Oh yeah, that's true. Well, yeah, they have price controls, I think, on the electricity. Yeah, there's actually a great article. There's a bunch of articles by Gene Epstein's son about this for Reason Magazine, talking about how the Venezuelan secret police monitor electricity usage to see if someone's mining Bitcoin, and then they're stealing the Bitcoin rigs and they're turning them on themselves so they can mine Bitcoin later on.
They do that here when people are growing marijuana. The electricity rigs tip off the authorities that such and such a house is using an extraordinary amount of electricity, and then they raid the house and they find they've got those UV lamps and they're growing marijuana in the loft.
I'm not surprised. But eventually, I think, in the next 10 or 15 years, a lot of marijuana legalization is already occurring. So I don't think...
Yeah, you got it in California, haven't you, now?
Well, I don't live in California anymore.
Oh,
I
know.
They've approved it for recreational use, and that's because California is broke and they need tax revenue. So,
okay. I went to my mum has a house in Palm Springs, and I went out there at Christmas, and I tried to go in one of those pot shops, and they wouldn't let me in because I didn't have the right doctor's note.
Yeah, you gotta. You can get it online. There's actually online dispensaries where you can meet with a doctor on a Skype call, and he can get you your doctor's note in an hour or less if you pay $100 or $200.
Yeah, so. I mean, I just wanted to go and have a look around the shop, Anyway.
Yeah, Colorado actually, they were one of the first to fully legalize marijuana for recreational purposes, and the tax revenues have spiked into the billions. So now we're seeing, the other states start to copy that. So for marijuana tourism, because a lot of the states.
Yeah, I think the numbers will be pretty compelling. You're right.
Yeah, especially California, because California has just huge pension fund shortfalls.
Yeah.
California probably going to be one of the first U.S. states to either need a bailout or go bankrupt or default on their pension fund obligations. But I want to talk to you about Bitcoin more. You wrote in the book, you had a very interesting theory on Satoshi Nakamoto, who he was. Based on a lot of the evidence that has come out, has your opinion changed on that?
Yeah, well, I haven't actually been following the story in anything like as much detail as I should have done since writing that book, but it actually looks like I got the wrong guy, amazingly. I mean, maybe I got prosecutor's fallacy or something, but it looks like I got the wrong guy. It now looks like it was these three people, Dan Kleiman, Craig Wright, and another guy. And I think the story's ridiculous, but Dan Kleiman was from Florida, for a computer forensics expert, and he lost his legs in a car crash, and so all he could do was sit in front of his computer, and became a very libertarian and became brilliant on a computer. And he did it together with this Australian programmer Craig Wright. But then Kleiman died, and Kleiman had all Nakamoto's bitcoins. It looks like Nakamoto was two of them, Kleiman and Wright. And Kleiman had all Nakamoto's bitcoins on a hard drive. And apparently he'd have operations, and he'd take the hard drive with him to hospital. But he never renewed his will, and he left everything he owned to his brother. So his brother now has the hard drive, but Wright has the key. And so Wright came out early last year and said that he was Nakamoto, and tried to prove that he was Nakamoto. And it seems the reason that he did this was to prove that he was Nakamoto so that he could then claim the hard drive legally from Kleiman's brother. Because there's a dispute, you're talking about over $1 billion of bitcoins on this hard drive. So it's a ridiculous situation where one person's got the hard drive and the other person's got the key.
That's interesting. Now, the Australian guy, Craig Wright, is this the same Australian professor that I've read about, or is this another guy? Because I was under the impression that he was being pressured by the Australian police and the Australian government to start paying taxes on the Bitcoin, and they were threatening him with charges, and they wanted him to pay taxes on his holdings.
Well, he actually came out to the government and said he was Nakamoto. I think it was part of his thing, but I think he owed taxes on another business. His home was raided, and then after he was raided, he came out. But there's definitely some tax avoidance stroke evasion going on there somewhere.
Yeah, that's very interesting. I mean, that's the thing about Bitcoin. A lot of people think it's totally anonymous. It's actually, you know, all the proof of all the transactions are there, so online. So and they're there forever. So if the authorities want to spend,
none of Nakamoto's have been spent.
Good point. Good point. Yeah. So they're not as easy to track because they haven't been spent. So you can't track the computer IP address where a transaction occurred. That's an excellent point.
Yeah. Yeah.
Yeah. So do you think then that there's been over $1 billion invested now since Bitcoin became popular 2010, 2011. It went over $1 and started rapidly accelerating. Over $1 billion invested from Wall Street, Silicon Valley, large corporations. What do you think then is the future of Bitcoin for other industries and disrupting other industries then?
Well, nobody quite knows. But I would say, like, the guy who invented plastic was a Danish chemist, and he was looking to find a cheaper way of insulating electrical wire, because in those days they used beetles. They used a substance made from beetles, and he was looking for a cheaper way to do it than beetles, and as a result he invented plastic. Now, you know, the applications of plastic are, you know, so manifold, and yet it was invented specifically as a way of insulating electric cable. Now, Bitcoin was invented as a digital cash, a system of digital cash, a system of cash for the internet. That was the purpose of Bitcoin, and it was to solve this problem of double spending. Which I'm not going to explain now. But in solving this, well, let me explain what double spending is. It's like if I send you an email or a video or a photo or something over the internet, you can copy any kind of digital code. You can copy and paste that code and send it to 1 or 10 or 100 or 1,000,000 different people. And all Bitcoin is a piece of digital code. But if you can copy and paste it and send it to 1,000,000 different people and it's money, it loses its value instantly. And so this was the problem with double spending. How can you stop people copying and pasting this money? And the way it got around it was this database called the blockchain that is a record of all the transactions that take place. And so Bitcoin solved this problem that had confounded computer coders for many years. But in my opinion, rather like this Danish chemist, you know, solved this problem of insulating electrical cable cheaply. In doing so, he invented something that would have 1 billion other uses. And that seems to be what's going to happen with Bitcoin, is it has a use as a digital cash system. But in fact, all the other cryptocurrencies are more useful. There's one called Monero, which is much more anonymous than Bitcoin. It has a far greater application and use on the dark net, for example, where, you know, people want their transactions kept secret. But it seems that the blockchain, this huge new system of distributed record keeping is what it is basically, is going to have uses in law, it's going to have uses in accountancy, it's going to have uses in insurance, it's going to have uses in voting systems, it's going to have so many different uses. And so I think the real future of Bitcoin is actually not Bitcoin, but the side thing, if you like, the blockchain. That's where the real future is.
Yeah, the technology behind Bitcoin is really impressive. In fact, if the real Satoshi would have fully come forward with proof, they should probably have won the Nobel Peace Prize for this innovation.
Sure. They should have done. bet more so than Obama.
Yeah, I hear Donald Trump may be nominated for the Nobel Peace Prize too, but I'm not quite. I heard rumors of that. I'm not sure.
Honestly.
Welcome to dystopia, right? So.
Yeah, that's funny.
Well, I want to transition now. Ask you about gold and silver. It's been a very interesting last 5 or 6 years in the gold and silver market. We've had a long bear market from 2011 to the end of 2015. The bull market kind of restarted. We had a nice big rally, and then kind of we've been consolidating for a while. Do you expect the bull market to start getting going again as these central bankers kind of it seems to me these central bankers are stuck. They don't really know what to do. They all seem to want to, devalue their currencies. They're all terrified of raising interest rates or letting asset prices fall. What's your opinion on where gold and silver fit into this with the global economic situation?
Well, I question the obsession that gold bugs have with central bankers. Now, I'm not defending central bankers for a second. I hate the things. I think that, the world would be a far better place without them. But this idea that zero interest rates is going to push the gold price up, well, the evidence of the last 5 or 6 years is that it hasn't. Zero interest rates pushed the gold price up for a bit between 2009 and 2011, and then from 2012 to, the end of 2015, they didn't. If anything, they pushed it down. So, I'm not sure, it's a narrative, but I'm not sure how much effect the actions of central bankers actually have on the trading price of gold. That said, what is my outlook for gold? I'm going to say cautiously bullish. I'm not wildly bullish. If you'd spoken to me 10 years ago, I would have happily bought into the argument that, the gold price is going to go to a level whereby the US can repay its debt with the amount of gold it has in Fort Knox, which is, some figure north of $10,000 an ounce. But it's only going to go to that level if there is a complete breakdown. And more so than I've felt in a long time, a complete, there is so much social division. And, there aren't two big elections this year like there were last year, Trump and Brexit. But even so, maybe what'll happen with Trump is kind of what's happening with Brexit, is that his opponents will gradually resign themselves and accept him. But maybe they won't. I mean, he's so loathed. And, maybe he gets impeached. Maybe this thing of the fact that Rupert Murdoch was at the interview that he did with Michael Gove that's come out today. Maybe that'll impact him, but somehow or other, he's got so many opponents and enemies, they're going to find a way of bringing him down somehow. Or maybe he'll bring himself down, who knows. But if he is brought down, the quiet right, if you like, are just going to go mental. There's going to be, at the moment, most of the kind of violence tends to be perpetrated by the angry left, who then will claim that the division is Trump's fault. But the violent crimes that you see on YouTube and so on tend to be. But if he is my theme is this. This theme of division, is it going to continue or is it going to die down? Because if it continues and worsens, then that is very bullish for gold, I would say. But if it kind of dies down and relaxes, then that's not so bullish for gold. So it's you're kind of, I want the gold price to go up, but I don't necessarily want that division to go up if it's going to hurt people. But it might be that we need this division to get where we're going to go. Now, there's a big war going on between, authoritarian and libertarian, between state and free, between the tax man and the person there's a clampdown going on by the tax man, because of this unsustainable problem of government debt. Now, all that should be bullish for gold, and its time is definitely going to come. But I'm not sure if that time is now and over the next 2 years, or if they can carry on, pushing it till further down the road. I'm just not sure about that. One trade I've recently made, I have quite a bit of gold myself, and I actually sold a lot and bought platinum with the money because I looked at the ratio between gold and platinum, and normally you would expect platinum to be maybe 20-25% more expensive than gold. That's certainly the average over the last 20 years. And at the moment, platinum is actually maybe 20% cheaper than gold. So there's actually a kind of 40% swing there. So, if that average returned to its, long-term mean, and gold stayed at the same price, $1,200, $1,250, then platinum's going to go to $1,500, $1,600 from where it is at the moment, $1,000. So I'm actually very bullish about platinum. The other thing about the gold price is, as an Englishman, I was very glad I owned gold last year. It was up at one stage nearly 50% in sterling, and the big canary in the coal mine is the US dollar. I still can't decide if the bull market is over and Trump's going to get the lower dollar he needs for his spending plans, or if there's going to be a global rush for US assets, the best house in a poor neighborhood kind of thing. And that's going to push the dollar higher. There's so many parallels between Trump and Reagan, and one of the ones that I look at is between 1981 and 1985, the US dollar index went from about 85, I think the number is, to over 160, 165, I think it was. It almost doubled. Now, the US dollar index at the moment is about 98, something like that. But even if it went to 120, it would just be so overvalued. And, but is this US dollar bull market going to continue? At the moment, on a relative purchasing power basis, it's too expensive against the euro and the pound and the yen. But those kind of valuations don't matter. It doesn't mean it can't get more overvalued. So, is the US dollar going to top here, or is it going to carry on rallying, or is it going to range trade? What's the US dollar going to do? Because I think that's perhaps the biggest clue as to where gold's going to go. I mean, I think Martin Armstrong's scenario, if I understand him correctly, is that first the dollar spikes and then gold spikes. And so we'll see if that's a definite possibility.
Well, if things get really bad and we have a stock market crash or interest rates rise or Trump starts a war or whatever, huge trade war with China, we could have a situation where the U.S. dollar and gold both rise. Just because it's not a normal correlation, normally the dollar and gold are, contra assets. They're inversely correlated, doesn't mean correlations can't change. So
no, that's true.
So if we have a 2008 or worse type of scenario, the dollar and gold could both get strong, and people could put those two are the highest safe havens then compared to other things. So it's tough to tell. I think people who are not sure what to do, if they own cash on the sidelines in dollars and they own gold and silver, I think those are safe liquidity positions there. You're not trying to make capital gains though on it. You're just taking money out of the system because we don't know what's going to happen. But, you brought up gold staying at 1,200, and if the gold price won't rise, I think a lot of the reason why the gold price hasn't risen because of manipulation. We have, just so much evidence now. We have Deutsche Bank turning over tons of evidence that there's been manipulation, and yet it hasn't affected the price. So what that tells me then is that there's been a lot more manipulation than a lot of other people think there's been, and that's what's been able to keep the price down, even though there's overwhelming evidence of it now that Deutsche Bank has handed over, the emails and the communications and stuff. So there's going to be class action lawsuits from miners and other counterparties who were screwed over the last X number of years, but that the U.S. court system is so big and slow, it's going to take years for that to happen. But Dominic, I would pose a question here. If gold and silver stay at these levels, I look at the balance sheets of a lot of the miners. The miners have been in a huge bear market really for since 2011. They've been cutting costs like crazy, and then every time they cut costs, the price of the metal goes lower. So I don't think that they can keep running these mines, either break even or at losses for that much longer. I actually spoke to one gold mining executive, and he told me that he was looking at primary silver miners, and he said at 17 silver, the miners can tread water for maybe a couple more years, but he said if the price stays at 17 silver for another 5 years, 2/3 of all the primary silver miners in the world will be bankrupt. That's what he told me. He didn't give me permission to use his name, but that's what he told me. So, and he was running the numbers and looking at the cash flows from the mines and the balance sheet. So we're going to have a problem here in the future. I don't know if it's going to occur next year or the year after, like you said, but at some point, you know, the miners cannot produce gold at $12.50 and keep the mines from shutting down, and they cannot produce silver at 17 and stay in business.
Well, yeah, I don't think if all the primary silver producers go under, I don't think that's going to happen, but let's just say they did. I don't think it's that big a disaster, because the biggest silver producers are all guys like BHP Billiton, who produce it as a byproduct, and they don't really care about it. So yeah, I'm not that worried about. I mean, I like silver at the moment, but yeah, I wouldn't worry.
The byproduct silver miners, that's a good point. The byproduct silver miners are still only about 65-70% of the market. So there could still be a 25 to 30%, which is what the primary silver miners make up. If the silver price stayed at these levels or went lower, that could potentially come offline. So 25
yeah, I know, like First Majestic's cutoff is like, I think it's 14. I think they need 14 or 15. Maybe it's $16 silver they need, something like that. Yeah, I know it's all a bit marginal at 17 for sure, and I think First Majestic is, you know, it's streamlined itself quite a lot in the last few years.
I agree. They've cut their cost. They've cut their costs a lot. If they didn't, they'd be in trouble. But yeah, a lot of the other miners haven't been able to do that. And there's not a lot of capital available too. From speaking with a lot of these guys, so there's not the capital right now to bring new mines online, because a lot of the new silver mines that would need to come online to replace the mines that have been that are producing now and being depleted, those new mines would need $25-30 an ounce silver to come online and be economic. So you're not going to see a lot of new primary silver mines for a long time.
No. Yeah. Well, I guess not. I don't know.
Well, yeah. So I want to ask you then about your predictions for 2017. I think you're predicting a lot higher price in Bitcoin besides a stronger British pound. Do you think then that Bitcoin, is going to break its all-time high in 2017?
Well, one of the predictions I made was that a Bitcoin would be at some stage this year would exceed the price of an ounce of gold. And I think an ounce of gold is $12.50, and Bitcoin's currently, well, it's about $9.50 at the moment. But I think that target was actually reached in the first week of the year for like 1 minute at 3 o'clock in the morning or something like that, because Bitcoin had this tremendous spike up to 1,150, something like that, and the gold price was at the time 1140 or something like that. So that target's already happened, but I think that's a bit of a Pyrrhic victory that I'm claiming there, if I'm saying that target. But I'm not saying that Bitcoin is going to go to $1,500 or $2,000 or something, but I think it has a lot more potential to than gold does, because it is still so under-owned on an institutional basis. It's still not possible for institutions to buy Bitcoin that easily. And when these ETFs and other things eventually, which seem to be taking an age, but when they do eventually come online and an institution can buy a Bitcoin, I think that has the potential to push the price so much higher. So that's one prediction, is that the price of a Bitcoin will exceed the price of an ounce of gold. But at the moment, on the current numbers, that doesn't look that likely, because Bitcoin is crashing.
we're supposed to know, I think, in a month or so, right, that the Winklevoss twins are trying to get approval for their Bitcoin ETF that would be
Yeah.
listed on a major New York exchange. So
Yeah, those guys have been trying for years, and they keep running into regulatory stuff.
But if that actually does go through, though, that would put a lot more demand from the Wall Street institutions and hedge funds and money managers that would put a larger amount of pool of capital behind Bitcoin than you think?
Sure, that's what could happen.
Do you also expect a lot of volatility in currencies in 2017? Because I mean, in 2016, we had moves in the Japanese yen, 1.5%, 2% in a single day, Japanese yen against the dollar. So in the past, Dominic, like a 2% move in a currency exchange rate for an entire year was a big move, and now we're seeing these in a day or two.
Yeah, I do see volatility. I'm normally quite good at reading the currency markets, actually, but beyond being bullish about the pound, I don't really have that many strong opinions because I'm in two minds about the dollar. I really am completely ambivalent about it. But one of my other predictions was that this theme of trade wars, which is something we haven't heard for years and years and years, will make a comeback, and it's already making a big comeback. And trade wars, currency wars, they're pretty similar things, really. And, I do see people using their currency as a means to try and make themselves more competitive. I mean, they've been doing it for several years now. I mean, they'll probably be doing it all recorded history. But if trade wars intensify, I can see more volatility in the currency markets for sure. The two big elections this year are France and Germany, but because France and Germany, albeit the two biggest parts, they're just two parts of something much bigger, the euro. If an extreme unpopular leader gets voted in one of those two countries, the equivalent of them voting Brexit, the euro isn't going to collapse in the same way that the pound did because it's just too big a currency and they're just one cog in a bigger wheel. But the more countries that leave the euro, I mean, Italy could have a big impact if it votes out. So yeah, I'm not quite sure what I think about the euro. I don't think it's going to last beyond. I doubt it'll be here in 15 years' time. But there's a lot for it to go through before it disintegrates.
Okay, so I agree with you, actually, that one of the major questions for 2017 will be what happens with the U.S. dollar and the dollar index. If you actually, I don't know if you're a subscriber to
You're a U.S. dollar bull or a bear?
I actually think it's best to trade the volatility, and on the UUP, which is the dollar index ETF, the currency ETF, I would actually be playing it with long straddles. I would be picking a in-the-money puts and calls and just playing volatility up and down because I think it's going to be a seesaw type of year.
Okay.
I'm not picking a direction. I would bet on volatility, and
Okay,
I would do that
fair
with
enough.
other currencies too, like the yen and the British pound. That's what I would.
Yeah.
If I was managing money at a hedge fund, that's what I would be doing. And then after you have a profitable move up, say the dollar strengthens temporarily with one of those long straddles, you could redo the trade. You could just move the trade to a different strike price with new puts and calls. That's what hedge fund traders do with long straddles and buying volatility. So yeah, I can't tell which way it's going to go. And that's based, on looking at the global financial system. It's perverse. We have the world reserve currency, the dollar standard, dollar is sold world reserve currency, and the petrodollar. And yet, all these other countries want to get out of the dollar long term. They want a new global financial system. And yet so many of these governments and foreign corporations have record amounts of dollar denominated debt. So if they want to get out of the dollar, why do they have so much dollar-denominated debt? It just seems perverse to me.
Yeah, it does. So, it's not like a human being to be inconsistent.
Yeah, exactly. So, so they're in a crisis then, Dominic, if we do have another 2008, they would actually need more dollars.
Yeah.
To pay off the debt faster, there would be a panic. So temporarily, the dollar index could get stronger. I interviewed Eric Townsend a few weeks ago. He's a hedge fund manager.
I know, yeah.
And he says if the dollar index gets above 105 and stays there, he thinks there's going to have to be a new Plaza Accord because a dollar that strong could collapse the rest of the global economy faster.
Yeah, well, I mean, I think 105 is probably a bit low, but certainly, I mean, I mentioned the figure earlier, 120. I mean, even 110, there'd have to be some kind of agreement to push it lower, because already it's you know, I think they calculated that it's 30% overvalued against the yen and 20% against the euro. So if it goes up to 110, goes up another 10% or so, you know, that's a significant amount. But I mean, the Plaza Accord in 1985, it was ridiculous. If you look at a long-term chart of the dollar, I mean, it's just off the chart pretty much.
Yeah, and Trump has come out and said he doesn't want a strong dollar. So he wants these spending programs. Janet Yellen has talked about raising interest rates 3 times in 2017.
Well, if she raises them, the dollar goes up.
Yep. Well, given the Federal Reserve's track record, though, I mean, like, the odds of them actually doing 3 interest rate increases, unless they intentionally want to crash everything while Trump's there, are pretty low. Because, you know, the Fed's long-term track record and their short-term track record, they don't have a lot of credibility of doing what they say.
Well, Bernanke did it. He kept putting up interest rates, didn't he?
Well, Greenspan was actually raising quite a bit before the 2008 financial crisis before he left. So he actually, with irrational exuberance, and he saw the housing bubble starting to overheat. Bernanke actually lowered interest rates a lot. He maybe did the 1 interest rate increase in
okay, he did the final one. So it's Greenspan who put them up then. I mean, Greenspan obviously was a slasher, but from 2003 maybe till 2007, they kept raising them by about a quarter of a point, didn't it? Every quarter or whatever it was.
Yes, Greenspan initially slashed them because when he came in after Volcker, he inherited, you know, high interest rates. So he started doing lower interest rates and creating a boom-bust cycle with his interest rate policy. But then he realized, you know, after the technology bubble that he had created, helped create a housing bubble, and then he started to gradually raise interest rates, but he wasn't raising them quickly enough to put out, you know, those crazy mortgages with the teaser rates, that those things in the subprime were starting to infect the rest of the housing market. Yeah. But I really enjoyed our discussion today, Dominic.
Yeah, my pleasure.
I highly recommend our books, for your books for our listeners out there. So if our listeners want to get your books and read your article and your predictions for 2017 and your Money Week articles, how do they do so?
Right. Well, the books are, one is called Life After the State, and you can buy it on Amazon, or you can buy it at lifeafterthestate.com, and you can also buy the audio book read by me, and you can hear what a beautiful voice I have. What better way of reading a book could there be than listening to the author read it out? And the same applies to Bitcoin, bitcointhefutureofmoney.com, and that's available on Amazon or Audible as well, or you can go to bitcointhefutureofmoney.com and order a digital copy there. So those are the 2 books. And if you want to read my Money Week articles, you go to moneyweek.com, and my articles come out every Wednesday. Go to moneyweek.com and sign up for Money Morning, and then you'll get my articles on a Wednesday. Or you can just go to the site on a Wednesday.
Excellent. And I'll put up the link for your Money Week column there so listeners can get to it, as well as the links to your books.
Sure thing.
I want to thank you again for your time, Dominic. I enjoyed this discussion, and we'll have you on again in the near future to talk about Bitcoin.
I look forward to it. Cheerio, Jason.
Mo and I are trying to raise $1,000 per month for our Patreon account. We have over 2,600 viewers per YouTube video, so if we can get most of our loyal listeners or all of our loyal listeners to donate $1 per month or up to $5 per month, which would be amazing, that would cover most, if not all, of the money that we need. So we also accept one-time donations. If you go to the wallstreetformainstreet.com website, we accept donations in cash via PayPal. Fiat, you can donate there. You can donate Bitcoin through our Bitcoin wallet there on the website, or you can donate gold and silver. We have a gold money account, and we also accept mailed donations of physical gold and silver. Thank you guys for listening, and we appreciate any and all help. Please forward it to friends. Okay, bye.